I think the issue is mostly not necessarily a lack of vision on their part, because they've shown that they have high aspirations. It's more a lack of conveying it, right? And if you think about what you view as a buying opportunity, I think that is something you view right there.
Hi, everyone. Welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. Here's your chance to be featured on Unchained. Every episode, we share listener comments. Here's what Knowledge had to say on YouTube in response to our recent episode with Udi Wertheimer on his Bitcoin thesis. The capital that is flowing into Bitcoin now is so much stickier compared to previous cycles. It's not just a trade for MSTR and other treasury companies, it's price-agnostic accumulation, a race to buy the most Bitcoins before others get their hands to it. To hear your comment on the show, write a review of the podcast overall, or leave a comment on our video on YouTube, Farcaster, or X. This is the July 25th, 2025 episode of Unchained. Imagine an AI that speaks crypto and does the work of a team of analysts. Trusted by 80-plus institutions, now open to serious traders like you. Visit askfocal.com. One early Bitcoiner sold 30,000 BTC too soon, missing out on over $1 billion. Don't want to make the same mistake? With Xapo Bank, eligible members can get instant cash without selling their Bitcoin. Check out xapobank.com/unchained for more. Today's show is all about Pump Fun and the token Pump. Today's guests are Jan Liberman, co-founder of Delphi Digital and managing partner of Delphi Ventures, Jason Pagoulatos, head of markets at Delphi, and Simon Smockey, research analyst at Delphi. Welcome, Jan, Jason, and Simon.
Thanks for having us. Yeah,
Thanks for having us.
This will be fun.
So the Pump ICO has been in the news, and Pump just generally. Obviously, in the very beginning, we saw negative sentiment leading up to their ICO. However, they did end up raising $600 million, and it sold out in 12 minutes, including private investment that brought the total to $1.32 billion. After the token listed, the price pumped for a bit, but it's now down, and sentiment on Pump also seems down. The founder, Alon Cohen, went on the Thread Guy live stream yesterday, and at the start, the price was around the ICO price of 0.4 of a cent. Afterward, it dropped to 0.3 of a cent. I also noticed it hit its all-time low overnight, and obviously, I know it's only been trading even for just a few weeks, so it's not a really long history. But let's just start with an overview question. Why do you think we have seen this arc with Pump? Why do you think sentiment kind of turned kind of quickly and the price is down? And we'll start with Jan.
I think it was a very contentious token to begin with, right? There were a lot of people who believed it was very extractive in terms of what it did as a business. I think that's a separate point we can argue, but going into the ICO, that's one piece of information. The fact that they were raising an insane amount of money while also having a massive balance sheet. So altogether, I think they raised 1.3 between this private sale that they did 4 to 8 weeks before the ICO, and the ICO, and so altogether it was about 1.3, and then they were rumored to have another 600 to 700 million on the balance sheet from proceeds from the business itself. So everyone was confused why this business needed to raise that much. So that also fed into it. The business itself had been really booming towards the end of 2024, and then kind of slowed down a bit in 2025, but that was more of a function of meme coin markets shifting a bit. And so I think if you compared the trend, right, the trend wasn't necessarily favorable for them, but on an absolute basis, the business was still very strong. And then on top of that, you layer in the fact that that it's sold out in 12 minutes. Everyone was kind of confused. So everyone assumed, okay, you have the market is telling you there is basically an insane amount of demand at this $4 billion price level. And so after it launched, there was this interesting situation where a lot of these platforms launched perps ahead of the actual token being launched. So you had price discovery before all these people were able to realize any money. And so the market was pricing it at 5 to 6 billion. The token went live, it traded higher. And I think wasn't a lot of clarity in terms of their roadmap and their plans, right? And so all of these funds that invested 4 billion just 4 to 8 weeks ago are now up 25, 50%. And it's kind of natural for them to take profits. It's kind of a bit of their fiduciary duty. And that has a domino effect as you assume that others are going to sell. And so everything kind of went the other way. And then so we kind of settled out at that 4 billion level. And then we had the interview that I think the market perceived as underwhelming in terms of what they were able to disclose about future plans, ranging from airdrop to what they're going to do to kind of reinvigorate the business itself. And I think all of that combined put a floor in, and or not a floor in, but kind of led to a lot of selling. And on top of that, you do have liquidations because there was this big perp market that existed before the spot market came into play. And so everyone's confused because they do have 2 billion on the balance sheet, and the token is 3 billion FDB, which you can't really, it's not apples to apples because this isn't cash that's owned by the token, but it is cash that will be deployed in one way or another to stimulate the business. So I think what the market wants right now is clarity in terms of what they're going to do, and that ranges from how they're going to spend the cash to what the future of the platform looks like. And the longer I think it takes, the more you kind of see people saying, I'm ready to dump. And then on top of that, I think what was extremely painful was the fact the rest of the market did really well. And so everyone who bought in was suffering from massive opportunity cost, and that made them rage sell. And you see a lot of that capitulation on Twitter.
Jason, I see you nodding your head.
Yeah, no, I mean, like, I have like a list of like 5 or 6 things that like I wrote down for myself like over the last couple days, like why this was such a underwhelming launch from just like a price perspective, right? Like, nothing has really changed with the business. So like Jan pretty much nailed all of them. Like I'm looking at the list I have in my notes here, right? Number one on my list is like contentious business, right? Like for weeks and weeks and weeks, you always have those debates on Twitter around like the extractiveness of the business. I know we've had several of these debates like internally on our, like our weekly research calls talking about pump and like, is it good? Is it bad? Like whatever, right? At the very least, it makes money. So like you have that. The pre-market perps, I think, was really interesting, right? Because a lot of the time you don't have these, or when you have had these in the past, they've been super low, like low volume, low liquidity per pair. So you didn't really have much price discovery. Whereas like in this event, you had, I believe it was like hundreds of millions of dollars traded on the pre-market perps before the token went live, which maybe kind of took a lot of that like speculative price action or speculative buying, like all of that potential momentum, like out of the sales. Comms from the team, Jan nailed it, right? Like you didn't have any real comms since TGE until the interview yesterday, besides some, Twitter shit posts that probably were construed as negative. Bonk, obviously, bonk.fun, all their metrics have kind of done extremely well. Whether or not it's fully organic or not, maybe Bonk is incentivizing some of that, some of those metrics on their end. Regardless, doesn't really matter. All that matters is, they've kind of been on the ascendancy. At the same time, Pump has kind of slowed in its metrics. And then personally, like the big one for me, like that kind of caught me is like the opportunity cost aspect that Jan nailed. Like it's one thing being in a position that doesn't do well, like being down, 20, 25, 30% for on a position in crypto isn't like crazy. It's pretty standard a lot of the time, but being down 20 to 30% while literally every other coin in the market has gone up that much or more is probably the nail in the coffin for a lot of people. And certainly has been a source of personal pain for myself. So yeah, like Jan nailed it. It's like that list. It's like you could just like point to 5, 6 things, and like when you have all of this, and then I guess like one more thing is like consensus before ICO like went live was that like, oh, this is a 12 to $15 billion business, right? So like if everybody's like expecting this, then like surely it can't be that simple. And turns out yet again that consensus is rarely correct, at least in the short term.
But I feel like at the start, when it first announced they were raising at 4 billion, the consensus was like, oh my God, 4 billion is way too expensive, no way. And then they sort of waited a couple of weeks, and then everyone wrapped their heads around like a 4 billion val, and then they're like, oh wow, 4 billion is actually kind of cheap. And now like the opposite is happening, where it's like it's live, and now everyone's like, oh my God, like this is a piece whatever, and it's like not trading well. I will say like one thing to add to what Jan and Jason mentioned is like originally they were only going to raise, I think, like a much smaller slice in the institutional rounds, but they ended up selling like 33% of the float as opposed to 25%. So I do think that is like pretty substantial, especially what is that, like an extra 500 or 400 million to the institutional side. And it really seems like most of those guys flipped their allocation after like the 50% gain. So I feel like there's not as many net buyers coming in. And then, like Jan said, I mean, those guys have sort of like a fiduciary like responsibility to just like take that gain, especially when like as you see, like the liquid funds have really struggled. So it's kind of like who is like the net new buyer at this point when there's already been like 1.3 billion buyers and then super duper active pre-market
So at least
stuff.
the way
So
I grappled with that was like, all right, well, it sold out in 12 minutes. Surely there's more demand to buy this token, right? Surely, absolutely, right? But yeah, I guess if you have funds that are, invested mid 8, 9 figures into the ICO and you have the chance to kind of lock in 20, 30+%, right? Like on massive size, like I probably would would too. So
yeah, I think it's just tricky to know how those guys are going to behave, and especially with no lockups. It's like maybe as an investor, you expect them to maybe not do that, but at the same time, it's completely rational and like totally
Yeah, well,
fair
this
to
is
do
like
that.
a point that Hasib Qureshi of Dragonfly and I were debating in a chat, because I was like, oh, I feel like the fact that there weren't lockups meant that the bigger investors, had that motivation to try to get those quick gains. But he definitely didn't agree with me. He said, oh, 6 months ago, people were complaining that the problem with alts was that they were all low float, high FTV coins, and the tokens are down because the insiders were like slowly selling, when as the lockups were getting unlocked. And then he said, now people are complaining there's too much supply and insiders aren't locked up. And he summarizes this as, my token went down and I want to blame rich people. but I said to him, I was like, okay, but like, let's say that you are a retail person, you only put in $100, like you're like, for you, $50, it's like not, it's just a gain that like doesn't seem worth it. Whereas like, yeah, if you bought 2 million, then like a gain of 1 million might be, but he was like, no, because if you have $100 million fund, then like it's not, it's like the same percentage gain. I don't know. So what do you think of that argument? I did see other people that were backing me up. So, but I'm not a VC, so I don't know like how you guys think about that.
I think price action will dictate narrative, right? And so if it's poor, people will just blame whatever mechanism took place, and you could have poor price action with completely, like diametrically opposed mechanisms, and both mechanisms will still be at fault because price action is poor. And so I think, in the grand scheme of things, I'd say this is healthier, right? You're getting a much more accurate reading of what the market thinks this should be worth, right? You have all of this circulating supply out there, and now individuals can size in if they want to, and you don't have this fear of selling. I you know I do think there would have been a good amount of appetite for these funds to invest with maybe a year long lockup, and if you wanted to do that, that's fine. I don't necessarily think that the lockup in the grand scheme of things is to blame, because if sentiment was positive and things were going well, then I think these investors would be holding. And so I guess zooming out, the way to think about it is, would the protocol be better off a year or two from now with a lockup without? You could probably make an argument either way, right? In the sense that you say that um, lockup probably means price is higher in the short term, which means your subsequent airdrops are more valuable and can be more stimulative to the community. And I think that's probably one of the better arguments to make as to why the lockup would have made sense. But um, in the grand scheme of things, everyone knew that there wasn't a lockup, and so it's not like anyone was bamboozled or anything like that. The information was out there, and everyone participated, knowing, and everyone had full information
Yeah.
basically.
Well, one question is like, I guess for me, it does raise the question of even like what the point of an ICO is. Cause I mean, and granted, I know things have changed a lot in this space. But if we are going to think about like, back when ICOs kind of originally started, the pitch was like, oh, you get your users aligned with you on this long-term vision, and it's kind of like a very similar philosophy to venture. And with venture, it's like you get these investors, they're locked up because they're in it with you for the long term, and you have aligned incentives for some period of time. So I guess, like, is it sort of like now, it's more the long term incentive doesn't matter as much, and it is more helpful to know what the market is thinking, or I don't know.
Yeah. So sorry, not to just follow up again. I think probably the main one of the main calculations you'd make in terms of determining whether or not you want to do a lockup is basically, all else held equal, I'd say a lockup is probably healthier for the 6 to 12 month trajectory of the project because of the long term alignment and all these things. I think it really boils down to, would there have been the same appetite for investor capital with the lockup, right? Would they have been able to raise $1.3 billion immediately if they had a lockup? And so then that's really what it boils down to, right? So if there was a lockup, maybe they wouldn't have raised as much, and that would be, that would hinder their ability to grow.
Okay, but okay, I don't know. I guess I view that as a little dark. It's like, oh, if we dangle this carrot of like you could get your short term gains by dumping on retail, like I don't know. I know that's like a very probably the most blunt way I can express that, but do you see how, I don't know, for me it
Yeah.
just
I think the dumping on retail component is more so a function of whether you're doing it in a non-transparent way. If it's known that these are unlocked and you have people, buying at a higher price, then there are also plenty of funds that participated. I'm not in the camp that this is kind of dumping on retail because it's fully transparent, right? And becomes just like a risk reward calculus for, I think, the protocol itself. Will we be able to raise this money? Then either way, then maybe we should have gone lockup because it avoids the kind of all the headaches that come with a fully unlocked token in the short term. But I'm
okay.
not I'm not in the camp that it's really dumping on retail because it's I mean, a lot of retail participated.
Yeah. I'm pretty sure I got dumped on by retail because I couldn't participate being in the US.
Yeah, it's more dumping on
So,
Americans, if
so
anything.
maybe I got dumped on here.
Yeah.
Okay, well, let's, because I know we have limited time, so let's move on. Just quickly, I wanted to know like what you thought of the interview with Red Guy yesterday. Like, as I mentioned earlier, the price just dropped during and then for the hour or two after that. I don't know if it was simply like that. He said there's no immediate plans for an airdrop. Like, I don't know exactly what caused people to, like, if you just look at it on the chart, it's just like a clear drop. So, what's your theory on that, or and just generally, what did you think of the interview?
Yeah, I mean, curious what Simon and Jan think, but like for me, it was like effectively what was it, like an hour-long interview where he said nothing of substance. So like, you had like several days of pretty, down only price action with people speculating the worst, right? Like, oh, no comms, so like it's obviously an exit scam, it's a rug, whatever, blah blah blah. And then he Thread guy, or I don't know who announced it, but they announced like a day in advance that they were doing this interview, and then you started to see maybe like a little bit of a bid in the token leading into that interview because obviously the market is like, oh, they're going to give us some clarity on what their plans are, and then it just seemed like a lot of his responses were very like lawyer crafted to an extent. Like he said a lot of words without really saying anything of consequence, and so maybe he can't because of the money they raise and it's all like private details or whatever. Like maybe he legally can't spill the beans on what a lot of their plans are and how they're going to use the money they raise to bolster the ecosystem. He did say that they would inject a significant amount of liquidity into the pump ecosystem, but that it's pretty vague. It isn't really like a concrete game plan for what they're going to do. They just said they're they're committed to winning, whatever that means. So like it just seemed like a very underwhelming interview, kind of to what Jan said at the top of the show, is like market expectations for communications and clarity around what they're going to do is very high, and this interview was not that. And then everybody's like, all right, you probably had people taking positions into that expecting something, some kind of move, some kind of mean reversion after the several days of selling. Once they realize no airdrop announcement, no no real announcement on how they're going to use any of their money. They probably exited, and then you probably had people that were just like holding on for dear life, being like, all right, like here it is, like here he's gonna assuage the market fears and make things better with this interview, and then that didn't happen. So you probably just had a bunch of people exiting based off of the underwhelmingness of the interview and what the high expectations were heading into it. I don't know. Me watching it, I was like, like after the first like 20 minutes, I'm like, we're not getting anything here, and anything else that comes out of this just sends the token lower, because it's just kind of like the opposite of what the market wanted and was obviously expecting. But again, the token's only been live for like a week and a half, so maybe there is some hope down the line.
I don't know why he would go on and, like, not give clarity. I almost think it'd be better if they just sort of stayed silent, rolled something out, and then went on after the fact. Like, okay, we just introduced XYZ, or like, this is our plan to, like, because Bonk in Radium's launch lab is like now clearly proven itself. It's like a pretty viable competitor at this point. Whereas like before the ICO, it was sort of unclear whether or not they would have like the ability to compete for like a sustained period. So I think when they were originally doing the ICO, the pitch was like, okay, we're going after a completely different market here. But right now, it's sort of, I think priority number one is to take back the crypto native like meme coin flow, and then maybe sell that grand vision a bit more, like once you are leading within crypto. And then on the airdrop stuff, I think I'm not really sure how bullish like announcing the airdrop like an airdrop would actually be right now, because that would just introduce more flow, and like you'd kind of assume that these guys would just sell. Like that is sort of typical airdrop like participant behavior. Like those guys are not introducing new buyers; they're just probably going to sell. So you kind of want to get
What
that
do you
spot.
think like taking back the retail flow would like look like? Obviously, it seems like most of the runners and stuff are happening, like whatever runners are happening from the Bonk launchpad. So like, yeah, how do you do that?
But I mean, yeah, like you mentioned, they have $2 billion. Like they can easily like create a few runners themselves unorganically, and I think that would do a lot for them. Really, like it's. I don't think it's even that complicated. Like you need the next useless or the next like Hosico or whatever to be like launched on Pump, and then that brings back a lot of positive sentiment for sure. It's very reflexive, like you mentioned. The same thing with like the token performance.
Right. So yes, the idea is that if you can have memes that actually reach higher highs and do pretty well, then that raises the broader ceiling for a lot of these others, and it extends the degree to which people want to hold and participate in kind of these launches, and that bodes really well for bringing users on. And so, there's been some speculation around the bonk side when all the big deployers kind of moved over simultaneously, and the chances of that happening, organically are not that high. And so I think that was a big driver of why people were skeptical around the bonk stuff. But there's obviously no real clarity. I on the token side, so I'm disclosure long, and I'm a buyer here. I think the issue is mostly not necessarily a lack of vision on their part, because they've shown that they have high aspirations. It's more a lack of conveying it, right? And if you think about what you view as a buying opportunity, I think that is something you view, right? This isn't some existential new piece of information that is changing the thesis around this. It's more about how the message is being conveyed, and ultimately, I think the same reasons you were buying at 4 exist now, right? It's these other things are more superficial and relatively correctable. And so if you're thinking about, the reasons for, um, if you like, basically you want to think about where's the biggest disparity between the reason for a sell-off and the actual sell-off. And I think the reason for it is pretty low, but the magnitude of it is pretty high. And then I think those setups are pretty great on a risk return basis. And then you sprinkle in, right, the cash on top, and it's a world where even if you don't think that they can succeed at what they're going to do, the attempt will still be a loud one, and you have to assume that they're going to generate a lot of buzz, regardless, right? And so that kind of also builds into the risk return
Well,
profile, I
so
think.
yeah, let's talk about like a few of the sort of different options here. So some of them are kind of like more directly around just like the token price itself. Like obviously, people are hankering for this airdrop. They did, originally announce that in, I think it was like May. And, as we can tell, like people, ever since the interview, they've been talking about the fact that he said there was not immediately going to be one. And I think people seem disappointed about that. And, in the same vein, like there's a lot been made about the hyperliquid airdrop and like how successful that was. So that seems like that could be an avenue for them. But, the question would be like, how should it be designed? So I'm just going to put a few things out there, and you can kind of answer any of these, or like, mention any of these in terms of how you think they should address this. Buybacks, is another one which they've already been doing, but it hasn't really stemmed the drop in price. So and just generally like any other utility around the token. And then the last main thing that I would want to talk about maybe is just like, it seems like, as you were talking about, like just generating more demand for usage of the product, because obviously we're in this phase where, Let's Bonk is really taken a lot of market share as of like an hour ago or 30 minutes ago or whatever. They now have 77% market share versus 19% for Pump Fun. That's for tokens graduating. So, um, uh, you know, but the last thing I was just going to mention is in the last few days, Pump did announce this community takeover feature, or not announced, but they rolled it out. And this is for when tokens whose creators have kind of exited or even rugged, or whatever the situation was, and the community wants to keep that meme coin going, and is able to not have the fees just like going to this person who's sort of a deadbeat. So anyway, yeah, just curious for like if you were in Pump Fund's shoes and you're looking at sort of these different options, like what would you be thinking? And there's probably others as
I
well.
think you mentioned, yeah, you mentioned the Hyperliquid airdrop. I think those are like completely two different, like it. They did the airdrop like so differently, where like they gave pretty much the entire like unlocked flow right now to the airdrop people. So that's like one of those, um, yeah, like that it's really hard to replicate. And then clearly when you're doing an ICO, like that's out of the question in terms of like having a Hyperliquid-esque thing. And also, again, like, Pump has completely different goodwill factor, like, it's that's I don't think
Yeah,
that's,
and they also even announced when they do the airdrop, I think it'll be like capped to, I forgot, it was like $2,000 per or something. So who knows? It just seems like it's a small slice, but yeah, I interrupted you if you have more on that.
no, 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 Jason, you're on.
Yeah, I mean, it's tough, right? Like, I think like the best thing they could do is probably something along the lines of what we like discussed a little bit ago. Is like they effectively, in my opinion, right? Like they need to like kind of get the eco humming again, like, and whether or not that's incentivizing a couple runners themselves, which again, like, isn't the most organic thing, but I guess like if you look at like Bonk and what Jan was talking about with most of the deployers moving all at the same time, it's obviously not probably an organic thing either. I don't really think the market generally cares, at least in the short term, about that. Like what matters is people are talking about the eco. There's things going on. There's coins running, so people are making money. People are talking about it. People are deploying on Pump, getting kind of clawing back some of that market share is probably like the best thing that they could do, at least in the short term. I'm not so like I know they talk about this whole streaming thing, but like for me, like seems like a very tough business to break into. Seems like it would take a ton of money, and it's still not really guaranteed that that would really necessarily drive the attention to back to the eco in the way that they want it to. You mentioned like the buybacks aspect of like Hyperliquid versus Pump, right? Like I guess yeah, Pump, like they bought back for a couple hours on like the first day or second day or whatever it was, and then they did like one transaction, like one $30,000 transaction since then or something like that, right? Like, so it's not really like a buyback compared to Hyperliquid, which I think is like a huge difference, right? Like Hyperliquid has the assistance fund that effectively buys back hype every day, and there's plenty of dashboards out there, but like even in the last couple days when there hasn't been too much going on that side of things, they've still bought back millions of dollars of hype. So it kind of like constantly puts in a price floor. At least it did post airdrop. So like you had a bunch of different dynamics at play, like, you know, the goodwill, the airdrop that Simon was talking about, the assistance fund buying back significant amounts of money. I'm pretty sure the team was also buying hype as well on the open market in the aftermath of the airdrop in, I think it was like late November 2024. So like it's just like completely different in that respect, and I'm not really sure like that would be the best use of Pump's cash. I mean, like it would signal something to the market to you know a decent extent, but it would probably be more short term than anything. Like I think they have so much money that they should focus on if you know will win at all costs, whatever that means. Like seems like the eco needs some help. That's where I would be focusing my efforts right now, and not doing like these odd buybacks that occur like once every 3 days and at like very random or seemingly random intervals with seemingly random amounts of money.
Yeah.
Yeah, kind of my take.
So on the buyback side, I agree. I'd make it programmatic. Just get that discretionary element out of it. It just creates confusion and is just fuel for ammunition, for people to farm some negative engagement. So realistically, you probably even want to just do something where you accrue all of the buyback funds and let them sit there and then deploy them later on, right? The market will appreciate it twice, basically. They'll see that accruing and then they'll start to price that in. And then actually when those funds start getting deployed and bought into the market. So I think you kind of get to double dip a little bit. And that way you also don't have to deal with the potential of these buybacks being kind of de minimis relative to the market cap and that being a source of negativity, but you can just have them accrue and then deploy them later. On the market share point between Bonk and Pump, I think market share is this is probably the most fluid space in terms of market share. I think it can easily go either way. Bonk did a great job like bringing all the big launchers onto their platform. I think the recent thing they announced also is really compelling, right? Where they're basically sending 1% of revenue to, I think it's the top 5 tokens, and that goes back to what really helps the market grow, which is seeing these tokens go to try and break that $1 billion market cap, because then the appetite and the animal spirits really come back, because everyone sees, okay, if I can figure out what the next meta or narrative is going to be, there's a massive amount of upside to be had. And so I think it's important, and that's a really great way to do it. The streaming component, both in Web 2 and Web 3, it's a bit of a loss leader. And I think, it does make sense to, it's a really good accelerant once you do have a decent base and get things going. And so the idea would be that you can bring on some non-crypto streamers and tap into this massive audience that isn't really participating as much right now. And so, you want to do that when things are going well. Otherwise, it can fall flat on its face, and then the market just perceives it as spend that's tough to rationalize. So I think you create a bit of momentum internally within crypto, and then you try and tack on this external audience, and then obviously the crypto users will also see that and think, all right, there's a whole rush of new people coming in. So now participating in this eco is higher EV than it was a week ago, and that kind of plays into the whole really fluid market share component.
Yeah, those are really good points. We're going to talk a little bit more about that kind of like ecosystem stuff and frankly, just business model stuff. But first, we'll take a quick word from the sponsors to make the show possible. Looking for your next big trade? Want to track every move in your portfolio, news, unlocks, price action, and open interest in one place? Meet Focal, your personalized AI assistant for crypto. Built for institutions, now open to serious traders like you. Focal surfaces high signal insights, automates your workflows, and helps you move faster in 24/7 markets. Find out why the smartest desks use Focal to stay ahead. Sign up at askfocal.com. Here's another comment responding to the recent episode with Udi Wertheimer and his quite bullish prediction of 400k Bitcoin in a few months. On X, Rick Amor Fati wrote, I do feel like sentiment around 100 to 120k has been sort of meh. Perhaps there will be a point this year when people decide to pile in 200 to 250k, and the price increase is crazy from there. Again, if you want to hear your comment featured on the show, please write a review or leave a comment on an episode on YouTube, Farcaster, or X. Back to my conversation with Jan, Jason, and Simon. I don't know if you guys saw this, and this might be controversial. Hopefully people won't be upset that I'm mentioning this person, but Suju tweeted something about what's going on with Pump, and He wrote, "The issue with the thesis that Pump will put existing treasury back into the token is that part of the point of the token is to placate equity investors in exchange for not having to give them pre-TGE cash revenue. Using said cash to then buy the token would defeat this purpose. Simple dividends would be easier." I was just curious for reactions to those comments.
There's no way for us to really know what they're going to do with that cash, right? So, there's a world where some of it can go to equity investors, but it's yeah, I honestly, it's hard to really comment on that. I think you can argue that if they were to buy back the token below the ICO price, that could be accretive to the balance sheet if then they want to sell it later on. I don't know if that's necessarily the game that they should be playing, but you can make the argument that that would be something accretive, and I think that's why there was a lot of shade thrown their way when they were doing the buybacks at 6 billion right after the ICO at 4. And so they're basically, selling at 4 and buying back at 6. I think that the question becomes, what's the source of that capital? And to some degree, the money is fungible, but I think if you're directing revenue from the protocol towards the buybacks, it's a bit different than using funds from the raise towards the buybacks. I think that doesn't really make a lot of sense. The idea is, each dollar that you deploy into the buyback, you'd ideally be able to generate more value to the protocol by deploying it in a more strategic way, right? And that's kind of the same thing happens in with traditional equities, right? When they're deciding whether to reinvest the capital or buy back their shares, it's more a function of, okay, we don't think we can do something more accretive at the moment, and we think the value is there to buy back our stock. And so I think you can draw parallels here. But ultimately, I think at this stage, particularly when above the ICO price, they should be using that capital to grow the business rather than buy back. But yeah.
Okay, so let's talk about this ecosystem stuff that we kind of started trending into. And I just want to also point out, like, I mean, it's just as I'm watching everything happen, it sort of feels like there's multiple teams kind of going after this sort of like everything app or some mixture of like a trading app and social app. And obviously, we're seeing that Base very clearly has even stated that that's what their the new incarnation of their app is supposed to be. We saw I don't know if she actually has already stepped down, but the if she hasn't, then the soon to be departed CEO of X, Linda Yaccarino, has said in interviews that X is also aiming to be that. Who knows? Maybe Robinhood is even pushing in that direction, because obviously they're going to have this Robinhood chain, and that could be like a first step. They were at the center of the whole GameStop mania. Like, that seems like a fit, but obviously all that social stuff was happening like on Wall Street Bets. Then we also have Pump Fun. They could be positioned somewhat similarly. I as you heard in the interview yesterday, like Elon was talking about wanting to help creators a lot. And obviously the streaming component of Pump Fun has been talked about, obviously, right when it started. Maybe it didn't get off to a great start, but I was just curious to hear your thoughts. Like, when you look at kind of the whole space, not even just like what Pump could do, but you sort of see the competition, like, what do you think their best niche will be? Like, what do you think would be their best path at, competing to be that app? Within that the wider context, what do you think would work for them?
I mean, I guess that's like the $4 billion question, right? But like again, I think like Jan and I mentioned earlier, like definitely going back and like taking the crypto native flow first. I think that's got to be like top priority right now. But I think a lot of people have definitely, rumored acquisitions like Axiom owning like the trading terminal, getting closer to like the user would be big. I don't know if that one would make sense, just because I mean at this point Axiom would be pretty expensive to buy. Maybe building something out. I do think they need a better acquisition than KOL Scan. Like, it's cool that they're like thinking about like the acquisitions and stuff. I just don't think the market, like, clearly is just not very excited about that. You heard like Alon talking about it yesterday, and like people were like, really, like this is the one. And then when they pressed him more on like, oh, what do you plan, like any other plans, like pretty much just like flopped on that question too. So I don't know. I think there are some interesting ways they could do like maybe like like a sort of competitor to like a Binance launch pool, for example, like whether or not they launch their own exchange or partner with other exchanges to basically help graduated pump tokens get like quicker listings or something like that could be interesting. Or just like more incentives to hold to like pump like their token too. There's a lot they could do, but yeah, I think it all really boils down to like sort of at least trying to claw back some of that market share. The streaming seems a bit like farther out for now, maybe. And even like Alon mentioned, it didn't seem as maybe immediate.
Yeah, I saw some people mentioning like they could use this huge amount of capital that they amassed to try to lure some of the bigger streamers, but I don't know. It seems like a little bit of a gamble. Jason and Jan, what are your
Yeah, and they'd have to roll that out really meticulously too, because you don't want to like spend all that money, have one of these guys come in and then just be complete like shit show where it just does not go well and like stains the whole pump fund thing again. So like even that's kind of a gamble. And yesterday on like the thread guy stream, you heard him mention like, oh, we want to like create like crypto native iShow speed or Kai Snap, where before we're sort of thinking like, oh, you're gonna sign one of these guys to like the big traditional Kick or Twitch, whatever deals. So maybe that's not the route they're gonna go, and they want more like organic, like born from the trenches, but we'll see.
Yeah, I agree. M&A is certainly something that they need to kind of shed some light on, and I think just broader plans need to be established to give people confidence. So all the mishaps, right, or the perceived mishaps are, I think, correctable, right? So I think the airdrop component, those terms will probably be changed because there's nothing really that invigorates the community more than an airdrop, and so I think they can come forward and say, listen, we're receptive to feedback and realize there are some corrections that need to be made. And in the grand scheme of things, you're investing in them for their ability to kind of ship and their hunger and their vision. And so I think adding this element of, reflection and ability to adjust course based on new information is also going to be well received by the market. It's not going to be something that would be seen as, flimsy, because ultimately it's all about landing on the correct decision rather than just being set on one path. So the streamer component is an interesting one that Simon mentioned, because initially, the assumption was, okay, they're raising so much money, they are going to go after one of these Kai Cenat, Sideshow Speed guys. But I mean, the amount that they make is kind of insane. It's like low nine figures for some of these guys a year. It's actually kind of mind blowing. So I think there's, in the same way that acquisitions need to be strategic, finding one of them that you can bring over is also going to be strategic. Where there is a lot of appeal to bringing to try and elevating one of the trench heroes into one of these crypto native massive streamers is really appealing. But I think in order to get there, you do need to bring in this larger audience that is then looking to find, okay, this guy has been right on so many calls that I want to follow him. And so it's kind of the timing of the two, right? Where you can simultaneously elevate a streamer while increasing the audience that he can tap into. So I think you can almost think of the streamer signings as some kind of strategic M&A, because like financially it'll be a similar expense.
Yeah, the one thing I would say is when you said that, like, this person has to have had a number of right calls. I mean, James Wynn got a big following by not necessarily. And then it was more like a rubbernecking situation. Like people just couldn't take their eyes off the disaster unfolding in front of them. So anyway, it's not all it it doesn't have to be like up only for it to work. Anyway.
It's kind of unrelated, but it's like an interesting side note. It's like not a streamer, but like Bonk Guy is kind of like that for like the Let's Bonk side, where this guy had a number of good calls, was super Bonk aligned. Like the community is completely like it's very like crypto native, like everyone loves Bonk, whatever. Whereas Pump is sort of the opposite. But like if someone with like a past history of great calls is like, okay, not only is the pump bottom in, but like this pump coin, like just evangelizes like a bunch of pump coins, like that might be an interesting strategy too, where like that sort of did work for the runners on Bonk so far. So that could be something to maybe keep an eye out for. I don't know who that would be. I don't think Alon is really shown to be that guy right now, but we'll see.
Jason.
Yeah, like I don't think I'm as bullish on the streaming aspect as maybe some of these guys. Like historically, at least in like web 2, like paying streamers 20, 30, 40, 50 million dollar deals plus to move over I don't think it's generally worked ever. And obviously, as Jan mentioned, streaming isn't a I guess running like a streaming service like, Twitch or Kick or whatever. Like it's not it's it doesn't make money. It's a loss leader, right? So like in terms of like, paying, I don't know, a Kai or somebody or Speed or whoever, maybe somebody like a tier below, it's still going to cost, to Jan's point, it's still like going to be effectively the same expense as an acquisition. And I just don't think you're getting nearly as much as you would by actually, acquiring some synergistic business or something to Simon's point, like getting closer to the user via something like an Axiom or Photon or whatever, right? Like I've just, I've kind of growing up as like as somebody who played a lot of games, like I've seen the streaming battles unfold for I don't know, over 10 years at this point. And it just never it I guess like just because it hasn't worked doesn't mean it can't work, but like I've seen so many examples of it just not working and that money effectively being lit on fire into the streamer's pocket. And then after, the streaming doesn't pan out the way that Kick or whoever envisioned, right? Notably, I guess it was like with Ninja and Shroud being paid, mid 8-figure deals and eventually going back to Twitch just a few months later after that whole thing fizzled out. I could I could see that happening here as well because it's not like it's like weird. Like you would think there would be overlap in, like the Twitch audiences versus, crypto native people. And there is to some extent, especially as the years go by, but like there still is like a pretty big bifurcation and people in like the streaming world that just like dislike crypto for one reason or another, whether it's, disliking NFTs, disliking, crypto in general, whatever it is. Like there is an overlap there. It's just not something like I get super, excited about when I hear them talking about like their streaming deals. Like maybe down the line it could work, but to Jan's point, I think you need to like get your house in order first. And then once that's all good, you can expand into things that are slightly, a little bit more outside your bread and butter. And I'm just kind of skeptical. It seems like the easiest way to light a lot of money on fire and get minimal back for it. So I'm just like kind of
Yeah, yeah, I was feeling like it like sort of puts all your eggs in not in one basket, but and not even all your eggs, but like a huge like one of
a
your
lot of your eggs in
a lot of
one.
your eggs,
Yeah.
yeah. So it's very risky. I did want to ask, well, actually, but no, before we move on to the next topic, I just did also want to ask about, now I feel like we're seeing like different strategies in the crypto space where there are some that are kind of sticking with like doing something that's very crypto native and just like getting a toehold in that audience. And then I feel like now we're also seeing other players that are like trying to move beyond. And I think that's why like sometimes Jesse Pollock of Base gets like made fun of on Twitter. It's like he's clearly trying to go beyond, and it's not even him. I'm sure it's like Coinbase. They're trying to go beyond like people who are already into crypto. But I was just curious if you had thoughts on like which of those. And I know we're so now when I asked you before to look at the wider context in which Pump is operating. Like I'm just curious for your thoughts on like everybody clearly wants this prize. They're trying to go after something where they are become the breakthrough app that isn't only getting crypto native people, but like everyday people who maybe don't really understand that it's even a crypto app. And I just was curious if any of you had thoughts on like which strategy was going to work out better, or which player, attempting to play in that space might have more of an advantage over the others.
I mean, yeah, Base definitely has a distribution, and especially with like this new mobile first Base app. I will say, like on that front, I think the market and like largely within crypto, we don't realize, but Pump actually does have a mobile app that is like doing pretty well, based on some of like the app store like download metrics. Yeah, I don't know. I do think like the Base rollout is really impressive. I think a lot of crypto natives sort of maybe faded that and just sort of like you mentioned, just like tired of Jesse or whatever. But yeah, I think distribution is really key, and like those guys are much closer again to like the end user and also retail outside of just our crypto bubble. So I think Base is probably looking good here.
Yeah, I mean, in terms of, being that like killer app that has crypto native people, tradfi people, just, normal people who don't have the crypto illness type stuff. I mean, it's tough, right? Like there isn't like a huge overlap between those like three cohorts. Like when I talked to like I was actually at dinner with a bunch of my friends from college last night, and like they just don't give a shit about crypto, like bluntly. Like and this is with me like trying to like pill them on crypto for 10 years. Maybe that's an indictment of me, but like, you know,
No,
that's
no,
like
it's
8
the
years.
same for me. None of
But
my
like
real friends are yeah, they don't
yeah, they
care.
just don't care. So like how can you like to your point, you have to effectively abstract everything away and anything crypto, you know, native away to get that group of people. But doing that, do you kind of like alienate the crypto native people that like do enjoy quote trenching or whatever it is? And then, you know, the TradFi folk don't really care about trenching either, right? Like they're here to buy big assets that'll go up couple X and do it with size and liquidity. And so like to me, like there isn't like a huge like when I look at the Venn like there isn't like a huge overlap in these three circles. So it's like really tough. And I think that's why everybody's finding it difficult to like, you know, break into that and become that like one-stop shop. I think like somebody like I mean, a company like Twitter or like Robinhood or I guess X or like Robinhood are probably the best position to do that, given that they have some crypto, you know, they have crypto native flow, they have normie people buying GME and whatever, you know, whatever they're buying now, and they have, you know, TradFi people that understand those businesses and stuff. So like I could see it evolving or, you know, emerging from like something like that. I'm not sure like a crypto native company is going to
But
be
do
able
you
to like
think those guys
reverse.
would even want to touch? Yeah.
Sorry, what was that?
Would a Robinhood or Twitter really touch, like, a meme coin
Yeah,
launchpad
I
sort of
think they
thing? Because
absolutely
it's
would.
just so, like they have infinite tokens, so it's too cyclical to where it's like yeah, it's just like the spiral where the circle gets smaller every time. I don't know if they would go into that as much. I don't know.
It doesn't. I
Yeah.
don't think.
But I do agree, like, those they have, like yeah.
But, actually, I mean, we have, like, a almost an existing, you know, company that is, like, moving into that space, but, like, when Coinbase announced that all the base DEXs, those tokens would be immediately treated like, that's, like, a version of that, you know, because Coinbase I mean, they're in the S&P 500.
Yeah. So I think it's easier to go from like a TradFi company into this than it is to go from a crypto native company back out and capture the other groups, in my opinion. I think like a Coinbase, like a Robinhood. I mean, I guess Coinbase is a crypto native company, but effectively it's like a, you know, it's a publicly traded TradFi company. I think it's probably like again, like those are the companies that have access to Simon's point, the most amount of users. They have the distribution. So at that point, it's a function of like integrating these things and maybe, you know, doing a strategic acquisition here and there, partnering with something here and there. It just seems like intuitively to me, it seems easier to go from that way in than to go from crypto native and branch back out and try to capture the groups that genuinely don't really care that much about
Yeah, you
crypto.
know, something I just realized right when you talked about Coinbase is that Coinbase during the years when it seemed crypto native was technically actually more like a fintech company because it was just providing the banking rails. And then now, like when you know, because they've just been around so long, we would call them crypto native, but actually their business wasn't for so long. And it's only now that they're trying to be more crypto native, but now they have that distribution. So it's like, in a way, you could say that they've sort of played this game perfectly, and which isn't to say they will definitely be successful, but that they have positioned themselves well for this moment. So we're like basically out of time, but there is just one last question. So I don't know if any of you want to cover this just briefly, but you know, it sort of harkens back to the comments I made at the beginning about how like ICO started a certain way, where you know like, there was a white paper, like you knew the function of the token. It was like this whole kind of thing, like you know could be part owner and like you know you would be part of the governance and like it was collectively community owned and here we are, you know, it's like Pump is a centralized company. They did this ICO. So I was just wondering, you know, and we are already seeing there's a lot of people talking about how like the foundation model is broken. So I was just curious, like what you thought the future of tokens was going to look like and like whether or not the, you know, the space is sort of just giving up on like decentralization theater, like, you know, and it's hilariously, it's happening at the moment when the SEC is saying like there's a path to do this. So I'm just curious for your thoughts on that.
Yeah, I think the fact that this was already an existing business, right? So you have less of this immediate need to provide a you know A to Z business model and vision. although I think, the market is punishing them for not having that post ICO. And I think, the silence can be a bit deafening on that front. The appetite for launching tokens is rampant right now in crypto, just because the regulations have eased. From what I understand, there isn't really going to be anything passed anytime soon in terms of a framework for how to get these live in a compliant way. So, anyone trying to hold their breath for that moment to launch, it's probably a bit unwise, because there's just it seems like it's at a standstill right now. But at the same time, there doesn't seem to be any kind of recourse if you're potentially doing it in a nefarious way. I think that the biggest form of recourse right now is just the market telling you how it feels. So this is a bit more akin to the old ICO vision, but I do think they need to shed some light on it. And then on the value accrual side, there needs to be something more cemented, I think, in place. Right now, right, the number floated around was 25% of revenues, and that might be the case, but I think the sporadic buybacks have created a bit of uncertainty in the market, and so there should definitely be some clarity there. And then you kind of do have this dichotomy between the value that goes to the equity holders versus the token, and that's always been a bit of an issue in crypto. And so I think just creating some certainty around that in some form would be appreciated in the market.
Jason or Simon, do you want to add anything?
Yeah, I mean, I think like the decentralized theater thing, like you mentioned, going away is probably a good thing. And like hopefully there is like a path to where these sort of tokens look maybe a bit more like equities, and that like you can pass value back to buyers in a way maybe that's like not a buyback. So just like like a dividend or some sort of distribution maybe. But yeah, I think like Jan mentioned in the pump case, like there's some interesting stuff going on there, but I'll let Jason too.
Yeah, no, I mean, I think these guys kind of hit it. I mean, I think, yeah, getting rid of like the theater around decentralization is probably good, but like I don't think like the actual ethos of crypto with decentralization is going anywhere. Like I think like right now we're just in a moment where you've seen like such like a big like upheaval in like the regulatory landscape that it almost feels like anything's game right now. You can kind of do whatever you want, and I think that's more of a function of like the prior 4 years being so miserable to do anything in crypto from like a like a good faith standpoint, that like everybody's like, okay, like now you can kind of just do whatever you want. I think it kind of like plays out over time once you get some of these more ironed out frameworks. Like I don't think like the decentralized aspect is going to go anywhere. I think like to your point, you're just like people are just like not really pretending anymore, which like is good, and I think it will probably be better for in the long run for the protocols and things that actually do kind of embody those types of principles, because it is important for crypto to kind of keep that ethos intact. And it's fine, not everything needs to be fully decentralized, not everything needs to be partially decentralized. Some things are better off being centralized, and that's okay. It's just that for years we kind of had like this whole fake decentralization thing going on, but I think now that everything's like kind of more out in the open, it is generally better for both the centralized and decentralized players. So like, I don't know, I'm excited to kind of see how things play out. I think it'll be a generally good several years for crypto going forward, given, the upheaval and stuff.
All right. Well, thank you guys so much. It's been so fun chatting with you all.
Thanks for having us.
Thank you.
Don't forget, next up is the weekly news recap. Stick around for This Week in Crypto after this short break. Selling your Bitcoin just to get cash? One early Bitcoiner did and missed out on over $1 billion. With Xapo Bank, you can access up to $1 million instantly without selling a single sat. Eligible Xapo Bank members can borrow up to 40% of their Bitcoin's value. No stress, no selling, no buying back in. Use it for what matters most: your dream home, your child's education, a getaway, or that can't-miss investment. With Bitcoin-backed loans, you're in control. Set your installments and repay in Bitcoin or US dollars, your choice. Enjoy competitive rates, zero fees, flexible terms, and no penalties for early repayment. And your Bitcoin stays safe, never rehypothecated, relent, or pooled. It's securely held until your loan is repaid. Check them out at zapobank.com/unchained. Welcome to this week's Crypto Roundup. In today's recap, Tether sets sights on a US-based stablecoin, while Wall Street titans embrace blockchain with tokenized money funds and crypto lending. Solana's new treasury venture aims to raise $1.5 billion, and Polymarket re-enters the US market with stablecoin plans of its own. A major lawsuit targets Solana and Jito execs over meme coin trading. Trump media shifts $2 billion into Bitcoin, BitGo, and Bullish prepare for IPOs, and Jito revamps Solana's block infrastructure. Plus, Telegram brings crypto wallets to 87 million American users. Let's begin. Tether, the issuer of the world's largest stablecoin, is preparing to launch a new U.S. domestic stablecoin designed for institutional use, marking a major step in its return to the American market. The move follows the passage of the Genius Act, which establishes strict requirements for fiat-backed digital assets. Speaking to Bloomberg, Tether CEO Paolo Arduino said, "We are well in progress of establishing our U.S. domestic strategy, and confirmed that the company plans to announce it in the next couple of months." The forthcoming stablecoin will be distinct from USDT, which serves global markets and currently holds a market cap of over $162 billion. Tether's U.S.-specific token will focus on institutional payments and interbank settlements. Arduino acknowledged competition from major financial firms entering the stablecoin space, but noted, "We have a much better understanding of this market than anyone else." That brings us to a broader trend among traditional financial powerhouses embracing blockchain infrastructure in a big way. Institutional adoption of blockchain technology accelerated this week as major U.S. financial firms unveiled a series of crypto-focused initiatives. Goldman Sachs and BNY Mellon will launch tokenized money market funds on Goldman's digital asset platform, backed by U.S. Treasuries. These funds will be available via BNY Mellon's Liquidity Direct platform, allowing institutional clients to manage liquidity and rebalance portfolios around the clock using programmable smart contracts. Early participants include BlackRock, Fidelity, and Goldman itself. The tokenized U.S. Treasury market has grown nearly 500% year over year to $6.75 billion. JP Morgan is exploring lending directly against Bitcoin and Ether holdings, marking a shift from its earlier stance. The move would involve using third-party custodians to manage crypto collateral and reflects broader institutional engagement under lighter regulatory conditions. Western Union is developing stablecoin on- and off-ramp services within its digital wallet. The firm is also assessing ways to offer stablecoin products to global users for cross-border payments and value storage. Meanwhile, PNC Bank has partnered with Coinbase to provide crypto access through the exchange's crypto-as-a-service platform. The collaboration will allow PNC's 12 million customers to buy, hold, and sell cryptocurrencies, further bridging traditional banking with digital assets. Speaking of institutional moves, a major Solana treasury initiative is taking shape, led by a familiar name. Joe McCann, founder of the crypto hedge fund Asymmetric Financial, is set to take the helm of a new Solana-focused treasury company called Accelerate, according to pitch materials obtained by Unchained. The firm aims to raise up to $1.5 billion and go public via a SPAC merger with GorzX Holding. Despite Asymmetric's liquid fund reportedly falling 80% this year, McCann announced its closure on X, writing, "I've notified our LPs that we are shifting away from liquid trading strategies." He offered investors the option to exit or roll over capital into an illiquid strategy. Accelerate's financial model outlines plans to raise $800 million via a PIPE, $358.8 million through the SPAC vehicle, $250 million in convertible debt, and $103.2 million from warrants. If successful, Accelerate would surpass Upexi to become the largest SOL treasury firm, with plans to acquire over 7 million SOL tokens. Another company making headlines this week is Polymarket, which is planning a return to U.S. users after years on the sidelines. Crypto prediction market Polymarket is preparing to re-enter the U.S. after acquiring QCX, a licensed derivatives exchange and clearinghouse. The $112 million deal gives Polymarket access to a commodity futures trading commission license, resolving prior regulatory barriers tied to unregistered trading activity. The platform had previously agreed to block U.S. users in 2022 as part of a CFTC settlement. But recent investigations by the CFTC and the Department of Justice have now concluded. Alongside the acquisition, Polymarket is also considering a move into the stablecoin space. The company may either launch a platform-native stablecoin or pursue a revenue-sharing agreement with Circle, the issuer of USDC. A person familiar with the plans told CoinDesk, Polymarket is locking a lot of stablecoin value in their betting pools, and so they want some kind of mechanism to get the yield. But while some companies are returning to U.S. markets, others are heading into legal trouble. A newly amended lawsuit is putting serious pressure on some of Solana's biggest names. A class action lawsuit filed in the Southern District of New York has accused Pump.Fun and its infrastructure partners of running a $5.5 billion unlicensed gambling operation through meme coin trading. The amended RICO complaint names top executives from Solana Labs, the Solana Foundation, Jito Labs, and the Jito Foundation as co-conspirators. Defendants include Solana co-founders Anatoly Yakovenko and Raj Gokal, Foundation leaders Dan Albert and Lily Liu, and Jito Labs CEO Lucas Bruder and COO Brian Smith. The plaintiffs allege the firms engineered and maintained a system resembling a digital casino, using bonding curve pricing and anonymous wallets to simulate gambling. They are not bystanders to fraud. They are its architects, beneficiaries, and co-conspirators, the complaint states. Additional claims include wire fraud, unlicensed money transmission, and securities violations. Meanwhile, a high-profile media company is going all in on Bitcoin. Trump Media and Technology Group, the parent company of Truth Social, has acquired approximately $2 billion in Bitcoin and related securities, marking a major step in its transition to a crypto treasury model. The purchase represents about two-thirds of the company's $3 billion in liquid assets. An additional $300 million has been allocated toward Bitcoin options, which the firm may convert into Bitcoin depending on market conditions. CEO Devin Nunes said the move aims to help ensure our company's financial freedom and support future token initiatives tied to Truth Social. Elsewhere, the crypto IPO pipeline is starting to flow again. Two major players in the crypto sector have filed for public listings, as the industry benefits from renewed market momentum. Crypto custody firm BitGo has confidentially submitted a draft registration statement to the U.S. Securities and Exchange Commission for an initial public offering. The Palo Alto-based company, which recently surpassed $100 billion in assets under custody, has not yet disclosed its target valuation or offering size. Meanwhile, Bullish, the digital asset exchange backed by Peter Thiel, filed publicly for a $100 million IPO with plans to list on the New York Stock Exchange under the ticker BLSH. Despite reporting a $348.6 million net loss in Q1 2025, the firm highlighted over $1.25 trillion in total trading volume since launch. The deal will be underwritten by a consortium of major banks, including JP Morgan and Citigroup. Next, we turn to a major infrastructure change coming to the Solana network. Jito Labs, which powers most of Solana's network activity, has introduced a major upgrade called the Block Assembly Marketplace, or BAM. The new system changes how transactions are organized before being added to the blockchain, with the goal of making Solana more fair, secure, and efficient for users. BAM is basically decentralizing ourselves, said Jito CEO Lucas Bruder, describing the shift as a way to give more control back to the broader network. Instead of relying on a single system to sort transactions, BAM uses a network of trusted computers to do the job privately and securely. This helps prevent unfair trading practices and creates a visible audit trail. BAM will also let apps earn revenue and share it with users, developers, or token holders. Jito plans to expand this system throughout 2025 and make its code open to the public later this year. In related news, Solana developers are testing a 66% increase to the network's processing limit per block, aiming to support heavier traffic from complex apps like DeFi order books and NFT mints without slowing down transactions. Now to Washington, where a new crypto bill is taking shape in the Senate. Senate Republicans have introduced a discussion draft aimed at reshaping crypto market regulation by building on the House-passed Clarity Act. Led by Senate Banking Committee Chair Tim Scott, the proposal defines a new category of ancillary assets, crypto tokens that are not classified as securities. Ancillary assets are described as intangible, tradable assets sold without offering equity or ownership rights. While not regulated as securities, issuers would still need to disclose information such as project details, supply metrics, insider activity, and leadership background, unless they raise less than $5 million in their first year or remain below that in daily trading volume. The bill instructs the SEC to adjust its rules for digital asset activity and would also permit banks to custody crypto, make crypto-backed loans, and run blockchain infrastructure. It does not address CFTC oversight, which is expected in a separate bill from the Senate Agriculture Committee. Finally, we wrap up with a major rollout from one of the world's most used messaging apps. Telegram has rolled out its crypto wallet, Ton Wallet, to its 87 million users in the United States. Integrated directly into the messaging app, the wallet allows users to send, receive, and manage cryptocurrencies without needing additional downloads or logins. Developed by the Open Platform and powered by the Open Network blockchain, Ton Wallet is self-custodial, meaning users control their own private keys. Features include peer-to-peer token transfers, crypto swaps, staking, and zero-fee purchases via MoonPay, using Apple Pay, Google Pay, or debit cards. A split-key system links wallet access to a Telegram account and email, streamlining security and recovery. Ton Wallet had previously launched internationally in 2023, with over 100 million activations by 2024. The US launch had been delayed due to regulatory uncertainty, but is now backed by the Ton Foundation. Thanks so much for joining us today. To learn more about Pump Fun, the Pump Token, and Jan, Jason, and Simon, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Iranovich, Pam Majumdar, and Mark Akuria. Thanks for listening.